Welcome to this guide on HODL, one of the most popular investment philosophies in the cryptocurrency world. HODL represents a long-term holding strategy that has helped countless investors navigate the volatile crypto markets. In this video, we'll explore what HODL means, why it matters, and how beginners can apply this approach to their own investment journey. Whether you're new to cryptocurrency or looking to refine your strategy, understanding HODL is essential for building wealth over time. HODL is a term that originated from a simple typo. Back in 2013, during a period of extreme Bitcoin price volatility, a user on an online forum accidentally typed HODL instead of HOLD. This mistake quickly became a viral meme within the crypto community. Today, HODL has been retroactively turned into an acronym that stands for Hold On for Dear Life. But what does this actually mean for investors? HODL is the strategy of buying cryptocurrency and holding it for the long term, regardless of short-term price swings and market volatility. Instead of trying to time the market or panic selling during dips, HODL investors maintain their positions with patience and conviction. The HODL philosophy is built on four core principles. First is long-term vision. HODL investors focus on years, not days or months. They understand that cryptocurrency markets move in cycles and true value is realized over extended periods. Second is ignoring volatility. The crypto market is notoriously unpredictable, with dramatic price swings happening regularly. HODL investors resist the urge to panic sell during market dips, trusting in their long-term strategy. Third is believing in the technology. HODL isn't about blind faith. It's about understanding and trusting the fundamental value and revolutionary potential of blockchain technology. Finally, HODL emphasizes patience over trading. Rather than making emotional reactions to every price movement, HODL investors practice disciplined patience, avoiding the stress and mistakes that come with frequent trading. There are several compelling reasons why HODL has become such a popular strategy. First, historical growth. When we look at the performance of major cryptocurrencies like Bitcoin and Ethereum over multiple years, we see that despite short-term volatility, these assets have trended upward over long periods. Patient holders have been rewarded with substantial returns. Second, avoiding trading fees. Every time you buy or sell cryptocurrency, you pay transaction fees. Frequent trading can significantly eat into your profits. By holding long-term, you minimize these costs and keep more of your gains. Third, reducing stress. Trying to time the market perfectly is incredibly difficult and stressful. The HODL strategy removes this pressure. You don't need to constantly monitor price charts or make split-second decisions. You can invest with confidence and let time work in your favor. Understanding market psychology is crucial to appreciating the HODL strategy. Let's compare two different investor mindsets. On one side, we have the short-term trader. This person experiences fear during price dips, worrying that losses will continue. They feel FOMO, or fear of missing out during rallies, often buying at market peaks. This constant emotional roller coaster creates persistent anxiety and often leads to poor decision-making. On the other side, we have the long-term HODL investor. This person remains calm during volatility, understanding that short-term fluctuations are normal. They maintain a patient mindset, focusing on their long-term goals rather than daily price movements. Most importantly, they have strategic confidence. They've done their research, they believe in their investment thesis, and they can sleep soundly knowing their strategy doesn't depend on perfect market timing. This psychological advantage is one of HODL's greatest strengths. When adopting a HODL strategy, understanding time horizons is essential. Time horizon refers to how long you plan to hold your investment before potentially selling or reevaluating. For cryptocurrency investing, there are three common time horizons to consider. The first is 1 to 2 years, which represents the minimum HODL period. This timeframe allows you to ride out some volatility and potentially benefit from market cycles. However, it's still relatively short-term in the crypto world. The second is 3 to 5 years, which is considered a typical investment cycle. This timeframe has historically encompassed full market cycles, including both bull and bear markets. Many successful crypto investors use this horizon. The third is 5 years or longer, representing true long-term vision. This is where HODL really shines. Investors with this time horizon have historically seen the most significant returns, as they can weather multiple market cycles and benefit from the overall growth and adoption of cryptocurrency technology. While HODL can be a powerful strategy, it's important to understand the risks involved. First, market downturns. Cryptocurrency markets can experience extended bear markets that last for years. During these periods, your investment may be significantly underwater. You need the financial stability and emotional fortitude to hold through these challenging times. Second, locked capital. When you HODL, your money is tied up in your investment. If an emergency arises and you need funds quickly, you might be forced to sell at an unfavorable time. It's crucial to only invest money you can afford to have locked away. Third, project failure. Not all cryptocurrencies will succeed long-term. Some projects fail due to poor management, security issues, or lack of adoption. This is why choosing quality projects with strong fundamentals is essential. Finally, opportunity cost. By committing to HODL1 asset, you might miss other investment opportunities that could have generated better returns. Diversification and periodic portfolio review can help mitigate this risk. HODL isn't appropriate for every situation or every investor. Here are 3 key scenarios when HODL makes the most sense. First, when investing in projects with strong fundamentals. HODL works best when applied to cryptocurrencies that have solid technology, experienced development teams, real-world use cases, and growing adoption. Quality matters tremendously in long-term investing. Second, when you have financial stability. HODL requires that you can afford to wait without needing those funds. You should have adequate emergency savings, manageable debt levels, and other income sources. Never HODL with money you might need in the short term or can't afford to lose. Third, when you have long-term belief in cryptocurrency's future. HODL is fundamentally about conviction. You need confidence that blockchain technology and cryptocurrency will continue to gain mainstream adoption and increase in value over time. Without this underlying belief, it becomes very difficult to maintain your position during inevitable market downturns. Even experienced investors make mistakes when implementing a HODL strategy. Here are 4 common pitfalls to avoid. First, panic selling. This is the opposite of HODL and defeats the entire strategy. When markets crash, fear takes over, and many investors sell at the worst possible time, locking in losses instead of waiting for recovery. Stay disciplined and remember why you invested in the first place. Second, HODL-ing everything without research. HODL doesn't mean blindly holding any cryptocurrency. You need to evaluate project quality, team competence, technology innovation, and market potential. Not every coin deserves to be held long-term. Third, overinvesting. One of the biggest mistakes is investing more money than you can afford to lose. This creates financial stress and often forces you to sell at inopportune times. Only invest capital you're prepared to have locked up for years. Fourth, having no exit strategy. While HODL emphasizes holding, you should still have a plan for eventually taking profits or rebalancing your portfolio. Holding forever without any strategy can mean missing opportunities to secure gains or adjust to changing market conditions. Let's recap the most important points about the HODL strategy. First, HODL is about long-term conviction, not gambling. It's a deliberate investment strategy based on research, belief in technology, and patience. It's not about hoping for quick riches or following hype. Second, HODL requires emotional discipline during volatility. Markets will fluctuate dramatically. Prices will drop, sometimes significantly. Your ability to remain calm and stick to your strategy during these periods is what separates successful HODL investors from those who sell at a loss. Third, only HODL projects with strong fundamentals. Not every cryptocurrency deserves your long-term commitment. Focus on assets with proven technology, capable teams, real adoption, and clear value propositions. Quality over quantity always wins in long-term investing. Finally, balance patience with realistic expectations. HODL is powerful, but it's not magic. Set reasonable goals, understand the risks, periodically review your holdings, and be prepared to adjust your strategy as you learn and as markets evolve. With these principles in mind, HODL can be an effective path to building wealth in cryptocurrency.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.